Yo, it's your boy Eli Wolf, Commerce Crew here, and we're looking at the QQQ. I just bought some 365 puts for the QQQ. The contracts expire on October 23rd, and we're gonna get into the charts and see why I did that. So over here, as you can see, there is a break of market structure, and it's a mitigation block that price is now getting into. And with that gap being there, I knew that price was going to get into there and start dropping. So that's why I bought the 365 contracts just now. And now I'm pretty much just exploring Thinkorswim a little bit. I haven't used this application in a long time, like probably over a year since I've traded options contracts. So I haven't done this in a while, and I wanted to use the Fibonacci extension to make a trajectory of my price target, but I wasn't able to figure out how to use it in time. So I just started marking out areas that I believe liquidity was going to draw to the downside. Then I checked the ES and the bonds market to see what they were doing at this time, for more confluence of price moving down. So I ended up switching to the NASDAQ chart just because I like the price action on that better. I didn't need to necessarily look at the QQQ, even though I traded the QQQ contracts. Some of you guys may know that's correlated with the NASDAQ. So as price is starting to retrace, I'm actually anticipating a breaker to form. So I'm actually going to get ready to buy for my second entry. And since it was a mitigation block that I got into on the first entry, usually mitigation blocks get retraced too. So that's how I knew that I would be setting up for another entry soon. But I didn't want to get it at the same place. I wanted to make sure that I was on the right side of the market. So what I did was I waited for an opportunity to form. So in the meantime, while I wait for the breaker to form, I just drew out like a stop loss. So if price went that high and knocked out my stop loss, then it would invalidate my whole analysis of what price is doing. But if we were to move back down stronger, we would need a breaker. And you can see I was circling the cruiser, showing pretty much what I just said. I actually, when I was screen recording this, I forgot to enable the sound. That's why I'm doing this voiceover. But I remember what was going through my head. So right here, as we broke below that short-term low, this is where the breaker forms. So I knew that there would be a fair value gap after this candle closes. Now at this point, we touched the lowest candle of the short-term low, so I decided to start loading up that second entry for a contract. Since we didn't create a candle that went below the red candle that you're looking at next to the green one, I knew that price was gonna go to that low right there that I'm hovering over. And I'm explaining this like way better. Oh, and I guess I'm talking about the gap over there. I explain this way better. I wish I had the volume on, guys, but doing the best I can here. But yeah, so I'm targeting that low right there, and I'm just explaining it as price continues to move around because we're on real-time data. This is a demo account, paper trade. So at that point, I was invalidating the fact that we're going to make a fair value gap, and that since we touched the low of that short-term low, we're just going to continue moving down. And once we get to that short-term low, we're going to just push right through it. So this is where I start adding that second contract. I actually did a same day expiration on this one. And yeah, guys, as you can see, like I don't have anything fancy on my chart. There is a moving average on there that I'm not using at all. That was already there, so that's something that I used to use. But I'm really just looking at the chart naked. So yeah, I bought that contract, and I'm just explaining how I'm going to be targeting those relative equal lows at the swing low, and then I'm pretty much anticipating price to run through it violently, reaching into that buy side, imbalance, sell side inefficiency to the left. I also didn't mark it out because, like I said, I haven't been on Think or Swim for a long time, so I was a little rusty on using the tools. But it just really goes to show, if you know what you're looking at, like you really don't need to draw these things out. I like drawing these things out because I'm more of a visual person. So yeah, on the screen recording, I'm talking about how I anticipated it to create those relative equal lows, like I just said, and I'm waiting for that violent move, push through it. And that's the violent move that I was expecting. And that's why I went to see what the profits were looking like. This is actually my first time executing options orders using smart money concepts, ICT. So at this point, I'm pretty much just, what am I doing actually? Oh, I was actually debating on if I was gonna draw out the box for the BISI or if I was just gonna take profits. Like, I was pretty much battling myself, knowing that I'm screen recording this, and I'm like, well, I don't want to not take profits, and then this starts going into the red. But I wanted to articulate like what I was looking at, because I felt like you guys weren't going to be able to understand anything because there's nothing on the chart, like I said, except that moving average that I'm not even using at all. And I think I'm actually explaining that debate that I'm having in my own head. As you see, the cursor moving around. But I also know that we got another leg to go. That price level, 15247, I'm not expecting it to push all the way down there. Like I said, I wasn't able to draw the trajectory of the move. I usually do that with a Fibonacci retracement tool. So I just drew that on the nearest swing low. And yeah, sooner or later, since the BISI gets balanced, I just look at what my profits are and I'm like, all right, well, I'm gonna just close these trades and continue my day. If you enjoy videos like this, give me a thumbs up and please remember to hit the subscribe button. Thank you for watching. We turn points to commas.